What is going on YouTube? It's Sanky and we are back with another one. Alright, so in this drop I'm coming at you with a couple of plays that will double up, but before I get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So I just had to come and circle back with you guys again tonight. Now we know it was a war zone out there today and the market's red across the board, but I don't want you guys to be feeling impatient, fearing these markets or losing sight of the end goal. This happens from time to time. The markets can get rough. That's why everyone walking the street isn't a millionaire from the markets. Those who have managed to build up and accumulate successful portfolios have been able to weather the storms in the market. That's why I come on here each and every day to support you guys along the journey, the good days and the bad days. Now, if any of you guys are feeling any type of way about these markets, fearful, whatever the case may be, do drop me down a comment. I'll pick that up and I'll get back to you guys. Okay, I want to ensure that you guys are as supported as possible, especially during these rough days. Now, in this drop, I'm coming at you with a couple of plays that will double up to give you guys something to look forward to if you're able to stay the course with me. So you guys know what time it is. Let's get ready for our first one. So the first one on the list, that's ChargePoint, ticker symbol CHPT, coming in at $23. Now it's been a while since we've spoken about this play, but they still remain a big potential play moving forward. Now, this one has been trending down closer to that support. Support comes in strong at $20. Now, support held up firm today, so this play stayed afloat. A lot of other plays did not, they sank below support. That's not the end of the world though for those plays, but it's nice to see if they held up firm at their support, just like this play did. So as I say, big potential play we have on our hands, and the narrative here hasn't changed. We know we're going through the EV revolution and we're going to need the charging infrastructure to support that growth. But what you guys got to realize right now is a lot of the EV plays are down. Okay, so you've seen that rotation of funds out of the EV sector. That's across the board, whether they're the vehicle manufacturers from NIO to Tesla, to the charging stations, to the battery manufacturers. Okay, so once you start seeing that rotation of funds back into the sector and more general better market sentiment, this one will make their climb. We've seen this one move, you see this one spike just the last week from $20 right up to $30. So you know this one's got flying potential behind it. So this is a double money play, but I want you to guys to know the double up won't happen this year, it will happen next year. So the best way to play ChargePoint is to go long on this play. Just set your expectations long term. Don't expect this one to double up in the next couple of trading sessions or the next month after you have purchased it. So you got to give this one some time, let that investment harvest, and those returns will materialize. Let's move to the next one. So the next one I've got for you, that's High Tide, ticker symbol HITF, another big potential play we have in the portfolio, just getting ready for their run up. Now in yesterday's drop, I made a mistake on this one. I said they were around $50, they're obviously 50 cents, but you guys know I'll be pumping out these videos late at night for you, so you got them early mornings you can watch on your journeys to work to get you in the right frame of mind and making these money moves. So as I say, this is the play, strong potential going forward. We know this one's got that aggressive growth path that I like to see, and they've been acquiring retail stores left, right and center. They're en route to hit 100. Not only that, they've been making those acquisitions. Smoke Cartel was only a couple of months ago. Yesterday they dropped news. They're acquiring a business called Fab CBD. It's going to add a chunk of revenue to their top line, take their business to the next level. This is that classic case of a play firing on all cylinders, but they're just wrapped up in that market volatility. And you guys must know there is no growth play out there that is free from the chains of the markets right now. They're all being held down from where they deserve to be. So this is why you're not seeing this one move up or any of the growth plays. That's just how it goes right now in the markets. But when those chains are released, once the dust passes, this will be a play that will climb. You guys know I've got a $1.20 price target on this one, and that's a conservative price target at that. Whatever angle you look at this play, it comes in strong. Valuation, price to sales 3 times. Their growth path, second to none. Over 100% year-on-year revenue. So that's why I've loaded up on this one, and I'm getting ready for the run-up. Let's move to the next one. Now the next one I've got for you, that's Marathon Digital Holdings, ticker symbol MARA, coming in at $33. Now we know this play is linked to Bitcoin. What's Bitcoin doing right now? It's just stabilizing in that mid 50,000 region, and it's been doing so for the last couple of trading sessions. But that's fine, guys. Stability is good, because when Bitcoin is ready to make its climb, you can be rest assured that Marathon is going to explode with it. Now check this out. Take a trip down memory lane on this one. This one's already been around $56. So when Bitcoin was, near its all-time high at that $65,000 mark. So if Bitcoin can resume its climb, get back there, or even surpass that, head to the 70, this play will double up. So this is a play I want to put on your radar. We know this one's volatile. You guys got to exercise caution with this one. You got to have your stop limits set on this play, and you got to have your exit strategy planned out from the jump as soon as you enter this one as well. You guys know this is a play we've recycled time and time again since November, hit success several times over, and the next time we hit success on this play is just on the horizon. So I'm going to bring this one to your attention, and again, they're still on course to deploy those 100,000 miners over the next 12 months. As I say, that just puts them in a league of their own versus all the other miners. And what you guys must know is there's very few mining plays that I rock with right now that I have a stake in. Marathon is one of them, Riot is another, and Argo is another. Now the next one I've got for you, that's Dogecoin. Now I've already taken you guys through the full 9 yards with this one on my previous drop. You guys know what I'm expecting over the week and how to handle and navigate the price movements that we see. But I see the movement in this one, the potential in this one. That's why I've highlighted them to you over the last couple of days and weeks for you guys to get your position. Again, same with Mara, there's a way that we handle these volatile types of plays. You guys know we don't just throw caution to the wind. What we do is we come in strategic. We've got our game plan, got our stop limits, got our exit prices, and our profit taking strategies laid out from the jump. But there's another one I'm going to bring to attention because again, it's another double money candidate. So those are the plays I want to bring to attention, give you a bit of an update on what to expect moving forward. And I want to use it as an opportunity to shine some light at the end of the tunnel and restore some confidence and faith back in you guys into these markets. Now what you guys got to know is this isn't the first time we're seeing this level of volatility, and it certainly won't be the last. But what you got to do is endure whatever the stock market throws at you. Now I know our family is packed full of winners, and winners, we don't give up halfway through the fight. Let's talk about how we can level up as investors. Now there's no day better than today to talk to you guys about panic selling. Now I know given the level of market volatility we've had out there today, have a lot of you guys on the edge of your seat thinking to panic sell out of some of your positions. Now if this sounds like you, drop me down a comment below, let's talk about it. Now the way to avoid getting such feelings, guys, is easy. All you got to do is just know the reason why you've invested into the company in the first place. And because Sankey says so, it's not good enough, because when times get rough in these markets, I'm calm, I'm collected, whereas you're probably exploding under the hood. So you guys got to get on top of your plays, know the reason why you've invested into them and what makes them a quality play. Because when times get tough in these markets, when it's red across the board and these plays come down, it will allow you guys to stay composed and know you're sitting on quality, and that when all this passes, noise in the market passes, these plays will come to light. A lot of these plays, they're unstoppable plays, firing on all cylinders, making those partnerships, making those acquisitions, building up their revenues. And that's why we get these bull runs. When you see these players run up 5% each day, that's because these players have been held down, depressed for so long. It's like when you have a dog in a cage all day, open up the cage, the dog runs wild. That's the same kind of movement these plays are going to make. So something for you guys to look forward to. All you guys got to do is just stay the course. So if Morocco the channel, you know what time it is. The question is, this is what I'm confused about. Most people say going long term is the best strategy, meaning years and years. But they also say take profit or sell completely when it's at 100%. So which one is it? So we've got our hands on another selling strategy question, so let's get to it. Now we got to realize is certain plays require different strategies. So simplest way I can put it is we can break it up into 3 types of plays. So you've got an Apple as your play 1, then you've got a grow generation, that's play 2. Play 3 is going to be Marathon Digital Holdings. Now what you realize is across 3 plays, we're on a spectrum of risk and volatility. So Apple is the lowest risk, lowest volatility. Grow generation, medium risk, medium volatility. And then we've got Marathon, high risk, high volatility. Now the higher the risk, the higher volatility, the more I advise you guys to take profit from the plays and more frequently. The lower risk the players, the less volatility, the more I'd advise you guys to leave the money in and run. So with an Apple, we're going to throw the money down and let it run over time. With a Marathon, use them as a short-term investment. They're going to be volatile, so we'll grab them cheap, sell them high, and repeat that, sell the rip. With a grow generation, we'll do a combination of the 2. So as the players climb in, and as they reach certain milestones, you can take some profit from the play. And that's how I'd run that. That's the best way to think about it. So that wraps things up for this one. If you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting the subscribe. Now I'm going to say I appreciate you all, and I look forward to seeing you guys on the next one.